Hello traders and welcome at this Bitcoin technical analysis video. In today's video we will have a look on price action for Bitcoin from the weekend. So from this point we'll be looking and I will be guiding you, I'll be showing you how I was trading past 2 days. I'll be going over my trade management and how I predicted most of the moves before they happened, which is pretty important because it's connected to your trade management and overall context to awareness. And we will be starting with the weekend, and also in the video we will go the second part over the CPI, which is coming up in few hours, and so you can prepare for potential scenarios for Bitcoin. If we get larger deviations, it's very likely gonna be volatile there for Bitcoin, either to the upside or to the downside, and we need to see what is the support and resistance areas on both scenarios, right? Okay, so I'll be starting. Also, I'll be going over my Discord posts. So let's start with the weekend price action. One thing I want to tell you, always, that's why I don't focus to trade weekends, because the institutional liquidity is not participating much, and most of the time we wipe out and we actually take weekend liquidity. Look at the past examples. Past 4 weekends, traders were longing here this weekend mainly. You also watch it in our aggregate delta templates. You watch it in the open interest, of course, what is open interest doing, and then we have Exocharts, so we can see exactly what happened where. So let's return back to chart. You see traders were longing this weekend, in the end punished, stop losses taken out, even their liquidity here sorted. Now traders going sideways, some longs and shorts as well. First market went for the long side. Stop losses on a lot of people got stop losses under these lows taken out, and then we got partial shorts managed as well. The previous weekend, the market participants were longing happily, and in the end, once the weekend ended, we started punishing them, taking their liquidity, and in the end liquidating them as well, not just stopping them out. What happened previous weekend, the most recent one? Look here, we are going sideways. Some people are already shorting, but some people are also longing. You can see that in the templates. First of all, we went for the longs liquidity. This was the first trade of the since I returned from the holiday, because I returned on Friday and this was the Sunday. First long here. Let me guide you over this trade. So I was seeing already past few hours as weekend was ending, open interest started to increase, and this was the most significant increase from all of the weekend, few thousand Bitcoins on the tether pairs. Now people trying to long heavily, especially here, and now market makers are seeing that, and larger trading capital as well. And now you see what happened. We are getting large wick, and open interest fully squared out. This is one of the things you need to watch and backtest for yourself. When open interest square out to the initial point of rise, you usually get a bounce. So because you destroyed most of the people participating in this move, so and larger traders had liquidity to fill their positions. So you watch for that. So and I was saying weekend longs tried longing in front of the 3 kilos and got wiped out while filling larger limits of patient traders. And now what lows we were taking? Look here. So first of all, I got you needed to have alert below this low, because why? It's high volume low. A lot of people will have some stop losses below this low. It was taken out. So Friday low taken out, weekend liquidity taken out partially. Also, this was more of a visual swing failure pattern, because we don't see massive volume spike. So we do get swing failure patterns on the visual basis as well. First day low also taken out. So you took out 3 lows, and very nice reaction. Look here. When we go a bit down, you see the weekend liquidity was not taken out fully, just start of the node. We oftentimes get start of the node trade with the visual swing failure pattern and not so exhaustive parameters. Or you take liquidity fully, and then you have most of the exhaustive parameters met and even better trades. But why we actually held this was coming from the order books. That's why you need Tradingdifferent to your trading. Yeah, you see I marked all of these lows here, and the smart capital, especially on the leverage markets, had very, very large limits, scattered iceberg orders, and they got filled. Yeah, so they exhausted the forced selling, and this was mainly stop losses getting hit, so it was not so many liquidations here. So they got easy fill, and we are pushing. And if you measure this trade alone, had has given us 1.70%. And that's beautiful. Bitcoin is finally waking up and the volatility is picking up. I'm really happy for that. So because since this weekend, since this point when I started trading, I had over 10 trades already. That's what I want. I want to scoop up more Bitcoins. Okay. Now with this trade, so very locally exhaustive, pushing nicely. You already aim, as you took liquidity from the weekend to the downside, you are aiming for the upside and to stop out shorts. Plus we've had another confluence, which was CME gap. So pretty decent deviation was created on the market from CME gap. So you already aim to close CME gap as the weekend is ending or as we will be opening. So really good target after some take profits. You can see from scalper perspective, I also share how I take some trades. Core entry here, I was adding here on the reclaim of the market structure and push above the lows, because the stop loss is very well defined under these circumstances. Take profit one at the daily VWAP, 30% from all position. Another push higher, 40% take profit into the market structure. And I'm leaving rest. If we close the CME gap and take out shorts liquidity fully, then I fully close the scalp. Right, I had targets. It happened while I was sleeping, so I had just orders here and my trade was fully closed. You could even have some nice short here, because you see we took out this more local weekend liquidity easily. That was already sleeping, so no trade for me. Let's go further down. I had some quick long here, but this was mainly take profit was taken fast because the order books were spoofing down heavily, so that's not so important. But the super important post is coming here, and this comes from your overall knowledge of context and liquidity and so on. So I said, in terms of liquidity, it's time to be defensive once we start taking out 25,500 low, as we have local liquidity build up from weekend below, and we know market lows to snag on the weekend liquidity. That's based on my statistics and backtesting, and should be same for you. As it is layered in front of the major liquidity below 25,300, it is possible we cascade right into it. It is also helping you to set proper stop loss for any long. You don't want to have too wide stop loss, rather re-enter after proper liquidity grab with exhaustive parameters met. So for this long here, yes, which I was taking before, I had very tight stop loss because I knew once we lose this low, market will easily cascade for the weekend liquidity at least. And now this is how market operates on fundamental levels. It tries to engineer liquidity. It tries to, capture and suck in people so it can break down or break up into the much more juicier regions. So weekend liquidity was stacked on top of the major liquidity from the building up for the past few days, and this was one of the main targets to be taken out. So it was easy just on cascading effect to feel this. And now when we go to the charts and when we go to the liquidity charts, you see what happened. So you see this warning was very important. You see what happened, and now it makes trade management of your trades much easier. Why would you use wider stop loss? Yeah, in our group, you are improving a lot on the trade management itself. You are not using huge, unnecessary stop losses, right? My stop loss for this trade, if I were holding, because I was holding Daytrades as well here, was very tight because I knew once we break down, look at the reaction, yeah. Weekend liquidity taken out, and we also cascaded right away for the major liquidity taken out also with the yellow zone. So full liquidity node was taken out. Once it was taken out, we stabilized and we started. I had multiple trades out of this range. We'll be going over them. Look here, market's finally stable and now pushing up, capturing all these traders. But let's not go far ahead. Let's see further. I was also saying, and this comes from Exocharts, 25,750 needs to be reclaimed so we can see local short squeeze. So far, market is very weak to do so. When market is unable to take out even the most aggressive shorts, pushing in the local downtrend, uptrend, it's sign of weakness. So 25,750, look at the chart. Let's zoom in. Yes, this was the price action. Let's go, let's turn off the weekend. Let's go over here. Let me put this line here. Yeah, so you can see how important it was. So 25,750. Okay, this was the price action here before we took liquidity and other stuff. Lots of aggressive shorts build up here. You see market was unable, they were protecting entries. We've got another push, but the order books also like change character. They were protecting their shots. They were, you know, ready to be for the downside, for that liquidity push. You know what is interesting? A lot of these people were greedy, and as market turned from this range, look what happened once we go over 25,750. Look what happened. Do you see these volume spikes? These greedy shorts got stopped out in the end. And that's why trap traders and greedy traders and open interest positions on the market, they work even after longer time. These people probably were expecting another huge drop, but didn't happen. They got stopped out. Market did a beautiful reversal here. Yeah, so 25,750 accelerated moves to the upside and moved almost to 26k. This could happen earlier, yeah, but we didn't have power, and we started trapping, you know, some more recent longs. Okay, let's go further. Now we can see the move down is happening. I was already scalping that. This was first scalp, even as the liquidity was not fully met. I had multiple counter trade scalps on the way to the downside, while the short from higher taken out, you know, was getting exposure. You see, as we're pushing down, we had naked inefficiency in the market, which was the previous month wall was not retested since we started new month. Yes, so that was giving me the first scalp as well. As we started going down, these bounces were very, very, you know, juicy, I would say. Look at that. Core entry here. Take profit 1, 60%. You already made a lot of money, risk free. Take profit 2. Yeah, so my exposure just 25%. Now we are getting pullback, yes, into the golden zone. It's time for adding around these market structure and lows. And another big take profit. So in the end, I got stopped out on this trade, but already made good money on this. Now you really wanted to continue in the change of market structure. Didn't happen, yeah, because you already, you know, held the local golden zone. Let's go further down. Yes, this now we took the spot lows. So this was more of a visual swing failure pattern. Look at the symmetry. So we knew we are taking liquidity, but those who don't have liquidity tools can use, of course, the balance zone extensions and overall extensions. And they are watching the 125 at 24,895. You can see why it's so important. Is usually the most aggressive liquidity. So when we go over here, let's delete this. 5-minute time frame. Let's go to balance zones. Yes. This was the main pivotal pool, and what happened here, look here, yeah. So even without liquidity tools, you can pretty much estimate where most people, the most aggressive positions will be stopped out, and it's 125, and beautiful push from this region for over 6.7%, and we were long because I was telling traders exactly to get into positions there. Let's go further. You see another we've got another scalp here. Market was very volatile. This was not 0.20% moves, but 0.5 to 1.2% moves, which I want to scalp even on the way to the downside. This comes from your statistics. Massive wall. This also helped exhaust overall sellers and for the bounce. Look here, over 400 Bitcoin. So if you know statistics behind the walls, very easy trade for you. Now we took most of the liquidity finally, 93% taken out. And this is very good post also. So we are not signal group, even though my traders know my plan. So I would not call this signal, but they most of the time know my plan, and most of the time I'm right on my plan. But sometimes I give this like silver plate trades on the, you know, when I'm really certain we get reaction, and I said next area of interest is at 24,900 to 24,850 for larger scalp, can give 0.9 at least. Let's go further down. What happened? We've got what I said, we've got 0.9% reaction trade so far from area of interest. I gave you guys on silver plate. Now, how I got this area? Very simple. On Binance, we had the week. Let me show you that. We need to go a bit clearer. Zoom out on 30-minute time frame. Like that. So you see, we've had a massive week, yeah, when we lost, you know, this was the massive drop from the 27,800 to 24,600. But for you, if you still can trade. You can still trade the. Let me zoom a bit. This was one of the notes in the week we were trading before, and another area of interest for you to trade the week before you take out the major swing failure pattern low is this node here. You've got a lot of trapped longs, shorts here, a lot of activity here. So this is the last node I want to trade before the low, and you see where we stopped. Yeah, look here. So the node was starting at 25,000, and now is ending at 24,800. So yeah, so I don't care about these regions where there was almost no activity. This is low volume, you know, single prints inefficiency in the market to fill, but I'm interested in areas like that. So 25,000 to 24,800, and where price found the bottom, if you zoom into small time frame, yeah, 20, you know, you already started bouncing from the region. So look here, 25,000, 2 weeks, and another week into the 24,850 to the dollar. So my area I was providing to traders, you see, was perfect. So, and I was also positioning, as I was seeing such a nice demand, I was taking these trades dually here. So I was taking a scalper account, day trade account, in case we do range and in case we break out. Yeah, it was also a possibility. So scalper, you know, had nice profit, but I was keeping the day trade longs as well. That's why I had participation on to the upside, right? And now what happened? As soon as we hit the 29,000, look what happened in the order books. Yeah, and you still want to trade with our order books? No way. Once we started to see the week, we are seeing, look at the increase. So suddenly, you want to see how much? Let's go to smaller time frame so I can tell you exactly how many limits were added to the order books. So from 8,500 bitcoins, 5% down, we've added a few thousand at least. Now this is major change of character for the Bitcoin. One of the members was asking, yes, and this is a good point here, can this be spoofing? I don't know much about it, but looks like some other time you showed examples of spoofing. So I said you will find out if it's spoofing once you start biting into them. So we need to go into them and to retest them. You see what happened here? We actually did it with swing failure pattern, and they were not. You see a large volume spike, open interest decrease, and you can watch that in Exocharts. This wall was filled and all these orders were filled. It's telling you right away this is very likely real. This is not spoofing. And I want to see the real orders because they are showing me intention. So some big trader wants to either take massive profit here from higher, short, or there is new loading up on the longs side, and they are just smart, and they are patient, you know, and they have time to fill positions. So this was really good question, and my reply was very simple, and as always, is not important. We spoof a lot. What's important is it can impact market into the local range and larger bounce. So what happened? Am I some vision? Do I see the future? No, but I have statistics and I trade this market for a long time with order books, so I know what happened. what this wall created. So it gave us local range, as I said, and it gave us larger bounce, right? It totally changed character. Look at the orders from before, you know, and demand. Yeah, look at the demand. Demand was okay. It was around 3,000-4,000 bitcoins, but now we doubled the demand. So it's showing me truly demand is starting here. Beautiful, beautiful. They are layering at Binance spot market major swing failure pattern low, which was not taken out on major down before. So definitely area of interest. As if we hold, it can give us nice bounce. Always ask yourself, one, when massive demand supply walls show up, if they make sense, where they show up. This is key thing. You don't want to see walls in some random places without technical analysis or just when it doesn't make sense. If you do that, it's more likely these walls are just take profits, yeah? And secondly, why the possible Binance liquidity, also some of the Binance liquidity was real there. So yeah, overall time to be vigilant. I said 24,800 once market starts taking that. And now these walls here, so 24,900 to 24,700. Look where they were stacked. They were stacked in front of the key spot market low. If you zoom out, yeah, and it got protected yet again. This low was formed back in 15th of June, right? 25,000, which we also longed. So yeah, there is heavy protections, and you can see on spot market we filled massive position. So it also they were trying to exhaust. Overall, this was the demand area. Since 17th of August with order books, when we approach these regions with the wicks, we are loading up longs. This was, you know, defining the bottom of the range we are currently in. Markets are in the end about supply and demand zones. Pay attention to that. If there is no resistance in the order books, market can go over easy. Like this pump here, there was also not much resistance, but once we started, you know, to go into the serious walls, market find the top. And you see all these local limit walls with decent size are also providing like more immediate tops. Yeah, very simple. But yeah, this area was super easy to trade, super easy. And look at the way to the downside. That's why it's much less likely you get massive breakdown to the downside with so many limits like we had here, because you see what happened here. All the limits were here, they were taken out, but there was almost not much, no support here. That's why, and also leverage overstretched the move. Limit order books were empty. And now we have a different situation. Why would you expect massive breakdowns over such big limits? It's less likely. You work with these statistics, yes? Okay. So yeah, very good point. So I hope you learn from this. And now we've got this trade here, and now we are getting even the more easier trade. So we are doing swing failure pattern of this low. We've retested the walls. We find out they are real. Yes. You literally needed 0.20% stop loss here if you just were trading this low. For me, it was the largest leverage trade, this one and this one, because I was very expecting we will hold this. So larger leverage trade. The stop loss also. Look at here, demand area perfectly holding us. This was the Scalp account, which was already I was taking some nice profits, some to be risk free. As it is larger leverage, you know, I take very scattered profits, so I don't scare order books. Easy. And the rest is history. We've got the massive pump. So let me go over that as well, more quickly, so the video is not too long. Now I was waking up into the massive pump. The pump happened mainly from the, we've got a lot of shorts. So you see, I was already speaking about these shorts. Now open interest totally declined here. So you've got short squeeze, and you see how leverage was pushing much more heavily compared to spot markets. That's all the sellers which were building from previous points. From here, although a lot of open interest selling into the lows, into the swing failure pattern. So you trap traders at the lows, and also from previous price action, you also had nice shorts. All of these people squeezed out and closed positions. Just beautiful. Let's go further. Yeah, I was showing where these shorts were destroyed from, as members wanted to know. This was one of the scenario I was looking. It didn't happen. I was, I was posting my ideal scenario. This is already Tuesday, yeah. So my ideal scenario for today would be fill local inefficiencies into the 25,200 to 25,050 to add to my day trade long and initiate new long scalp. Such the pullback would be gift, as you already should be positioned. You had two chances to do so from 25,900 to 24,850. So yes, I was positioned already from day trader, but in case market gives me deeper pullback and fill the local inefficiencies created from Asia session, I would be happy to, to enter long with these trap traders from here, because a lot of shorts got trapped here to these naked box. Didn't happen, perfectly fine. And I also said, as I missed the daily view up trade during Asia while I was sleeping. So yeah, that was the long. You already should be in. Look here, we will turn on the daily view up here. Right? So market is doing very impulsive moves to the upside, and on the first retest of the daily view up, you are seeing very nice stability. So you are getting long here, and you see, if you missed this long here, you still got big bump move to the upside of the 3.5%. So fantastic, right? Yeah, this was important, but I was sleeping on this, so it's okay. Now this is also in open interest knowledge. So I said open interest is increasing rapidly, over 260 million already added to the tether pair. Sooner or later we will get volatile move from this local range when you have data like that. We are seeing 60% of people getting long, 40% getting short. You can see the exact ratio. Let me show what happened after. This is how you can predict the move. So I said, just based on open interest, I said we will not see just $20 candles, set candle. Once we break out, look at the volume, right? Just from the open interest, massive spike to the upside. Look at the open interest, yeah. And open interest is one of the things which allows you to see the future. Small range at the top, trader's position, and now massive move to the upside. Look at here, $300 move. Most of the shorts from this range stopped out. Now you are left with longs. And small market was selling, but it was absorbed heavily. I was posting this, so now auction market theory takes over. This is why one of the most important things you learn in the group at the beginning, because in the end it's all about it. Auction market theory and range rotations are like one ring, and is ruling them all, like in Middle Earth. So I said, and of course on your day trade longs you already hit another take profit target. So we hit another take profit target, but as it is our key auction market theory resistance at 26 to 26,100 with main point of control and VIX high volume node. If we manage to reclaim it, we will target 26,500 highs and full range rotation. Let's see on the chart, right? This is how you manage your trade. Bigger time frame, 50 minute time frame. We'll be turning on the local high volume node and the range. Right. So I was warning traders here. If we push over this and reclaim, we will do range rotation, and it's gonna be final take profit for our scalp and day trades. Yes. And look what happened. So once we reclaimed this major area of resistance in the past, massive resistance, now we finally flipped it, and we've hit the full range rotation. So you are taking major take profit, and you're also looking for short. And now 50-minute time frame, you see how we flip this high volume node and point of control to the dollar almost into the support. So trading this range was very profitable. I was when I was shorting here, I was taking profit here. You could also long here and take profit at the highs and just trade this zone for until it holds. Yeah. Now we finally lost it. Retest here and back to the it's a lot of chop out there, so it's not so already yeah. We also got the scalp short from once we've run all the liquidity, yeah, now to the upside. You see, this was very like the most very aggressive liquidity node build up to do aggressive swing failure pattern. But now with this price action, you build a lot more liquidity above us. 26,300 was another trade for me. 0.76% already in the pocket, risk-free extra profit. And shorts from low coverage wipe out, remaining open interest longs. Yeah, that's what I was saying before. We also had a 4-hour order block. Okay, let me accelerate this. There is still a lot to talk, but I will be now. I will be showing you one more thing I was posting, and then we will have a look on CPIs. And the video is not too long. Yeah, I can do this education for hours, but we don't want these such long videos. One more thing I was warning traders about, and this absolutely nailed the market. So you see, we were pushing over here. 26,300 was taken out, and I was giving clear trading plan based on liquidity. I said, market just took out local liquidity, providing us lovely trade. Yeah, that was the trade I was showing before. If we manage to push further later on, be aware of the major liquidity buildup about 26,500. Now it's possible we get more of visual swing failure pattern at 26,436 high first, as it will also complete our 25-day range rotation, and so some longs will take profit. And you see what happened? It happened exactly as I said. And now we'll be showing you reasoning why. So you see now we were pushing further. Look at the massive wick. Here is the swing failure pattern of 26,436. On the small time frame, you could see very aggressive swing failure pattern happening. Maybe a lot of world was expecting we will take out liquidity fully, but you know, again, auction market theory took over everything, because once you hit these regions, all the longs building from earlier for the past 2 days, they take profit. So even they were additional force on the marketplace to push us down. So not only you had aggressive shorts, also a lot of longs were taking profit, same as me, and all those longs were taking liquidity from the order book. So you can actually reject just based on the longs take profit, right? So yeah, and this was the main scenario which played out. You see, I also said if it happens, you need tighter stop loss behind swing failure pattern high, so you don't become liquidity. Yes, so you are doing swing failure pattern, you're already getting risk free. Now you are making a lot of money already. We take profit too, but you don't want very wide stop loss like somewhere here or here, unnecessary, because you still have the major liquidity to be cascade. This is again what you learn in the group. You don't set stop losses in such a major liquidity nodes, or you will become liquidity and overstretch unnecessary losses to you, right? Okay. And also I said if swing failure pattern happens, we will be important. We don't want to see sluggish price action. So I don't want to see, as we are, going high, I don't want to see something like this, very slow price action, no volume, it's like snail or bidden reading speech. No. We want to see big push, big wick, big rejection. That's what happened. Okay. So yeah, in case of no swing failure pattern, you know how market is after liquidity, and if it pushes beyond, it will be after key naked point of control and trap traders area, and also filling inefficiencies. So you already know everything. You already have full plan for your trading, right? Nothing surprises you. If no swing failure pattern, market is going after liquidity, local inefficiency filling, so single prints, low volume node single prints. Possible to stop and give you scalp trade from the main golden zone, 1 month high volume node, and the downtrend anchor view up, but it's weaker zone than this one, because here we still have inefficiencies. Still market was pushing heavily, but this is the trade area you want to trade, because you have a lot of trap traders here, and yeah, daily naked point of control. But we will go on that at the last part of the video. Let me check how much. 34 minutes. Okay. Okay, let's go further. So yeah, we went over the lot of scenarios I wanted. There is more to go over, but it's fine. Now, last part of the video, let's have a look on Bitcoin from the what we can expect from CPI. So generally, this CPI report is going to be very important. Let me check if I can find the post, because I was doing the post a long time ago. Yeah, here. So this is my post from 10 of August. We've got the CPI report. It was pretty fine back in August, but I said September will be interesting. In the last week, oil went up 15%, natural gas 40%, and many food prices did the same, rise with. So the really important CPI data is not today, but the September one, which will include all these price increases. Yes, today is the most important CPI day. If we get very large increase in the CPI, it's going to be very likely. Also, what I say in the video is just for education and entertainment, no financial advice, but it's going to very likely affect risk-on assets as Bitcoin to the downside. Also, stock market falling, dollar getting stronger, yeah, because higher CPI means the Fed rates needs to stay higher for longer, and yeah, and it means more hiking probably. So yeah, dollar very strong, and it's very likely Bitcoin will dive. If we start to get a big dive on Bitcoin, you are watching this trade area here. This was the area I wanted to, wanted this area for the continuation trade. We have the golden zone here, but this, is more on the market structure. I will be watching that, but it's not so strong as this naked daily here with such naked POC, because we've got these trap traders here as well. This is yet again inefficiency, fair value gap, low volume, and single prints in here. So yeah, this golden zone position is pretty bad, right? But it's you watch one scenario, of course, which is another range rotation. So you will be watching this first trade scenario like that. Yeah, this could be tradable, but I would prefer even deeper pullback here into the trade area, which can give us easy 1% plus trade. Or even, if you change market structure yet again. But yeah, market looks decent now. But yeah, we will see on the data. Data will be crazy. If you lose the trade area, then it's going to be problematic, and you need to be defensive. You need to be really defensive. Why? Very simple. You see, this was the VIG on Bybit. Bybit super overstretched heavily. There were a lot more longs on Bybit than on other exchanges, so the VIG was much larger. But on Binance, this is the major swing failure pattern on Binance, 24,581. Okay. So if you take out this low, and if you take out this major swing failure pattern Binance low, it's very likely you will take out the major liquidity node, and this major liquidity node is pretty crazy. It's over $500. I definitely don't want to participate with market here, and especially if it's buying tail of the Bybit. Yes, it's low volume node overall. I will let liquidation play out, and just below that is another massive liquidation node. So we will see, and yeah, you need to be defensive. Also with moving here, you will be taking out this spot low, yeah, which also is very important. So spot market trader will also be puking out. So be really defensive below 24,500. It's you don't want to get into these regions because it can get really ugly. And if you get there, I already prepared traders in our group with the swing failure. I mean, with the swing trade posts in case it happens. Look at the Binance liquidity, was not taken out on drop. Yeah, so be careful under 24,500. I will not be giving you targets because we need to see how we take out the liquidity and how we behave. And below us, we have the we have some nice trade areas I plan to trade. Okay, 2 of them. So yes, this is where I have alerts on and so on. Very obvious. And to the upside, so in case we get lower CPI and especially like larger deviation, if market is surprised, even after massive oil price increase, even after massive net gas price and food prices, CPI still goes sideways or even down, I think it's gonna be huge risk-on day for the global world. Stock markets very likely go up, and Bitcoin as well. Bitcoin actually can take out this high very easily if it happens, and then we will be looking for our next trade area. So we'll be looking to fill the remaining inefficiencies, which are ending somewhere here, take out the major liquidity, and go into our trade area above us. So where we have the golden zone, decent order block, we have key local level. This level provided us, look here, it was formed here after the big drop, provided us very nice support here. So this is the key, like local market structure precise level is starting here, but the trade area is just starting, you know, is like pushing a bit higher. And for me, the most important thing is, of course, we have a lot of traders who are trying to, you know, after the initial pump, we've got some local range here that people were trying to heavily long into the upside, and they failed. So very likely we get scalp traded at least from here, or even day trade. So we'll be watching that, but it depends on the news, because CPI can affect assets not just for today, but into the multiple days. We can get like a trend environment. So be very careful. But yeah, scalp is very easy to get from the trade area. Okay, and if we fail, you know, if we get trade or just we slice over this area, of course my trade area is not like I'm guaranteed to take the trade, but you know, is area where I watch for trade. And to the upside, possible to scalp this naked daily here with monthly view up close. Yeah, possible scalp. But further to the upside, we have the medium swing failure pattern. So it's also trade area for me, because we have the downtrend, the main downtrend anchor view up is coming here. So some longs can be taking profit, and yeah, be watching for swing failure pattern of that low. If we don't get swing failure pattern of that low, this will also change character on higher time frames, and we can actually establish some higher, you know, like uptrend into the stronger resistance areas above us. And for that, I'm also prepared very well. So yeah, but I will be giving you just this area, so you know what's likely. Okay, so thank you for watching, guys. Video is already too long. You will see more content from me. Again, I still plan to make tutorials for some of the tools. So stay tuned, and I wish you really good trading. Volatility should pick up now from September. We are ready. Thank you for watching, guys, and bye bye.